The fall of Lehman Brothers, the biggest mistake in Wall Street history. September 15, 2008. A massive investment bank collapses. Panic erupts across global markets. And within hours, the world is pushed to the edge of financial disaster. This is the story of Lehman Brothers, and why its fall is considered the biggest mistake in the history of Wall Street. Welcome back to Make Money with Panda. Today we're diving into one of the most dramatic, chaotic, and world-changing events in modern finance, the collapse of Lehman Brothers, a bank that survived the Civil War, 2 World Wars, and the Great Depression, but didn't survive 2008. In the next 8 minutes, we'll break down what led to the fall, who was responsible, and how this one event changed the global economy forever. What was Lehman Brothers? Before its collapse, Lehman Brothers was the 4th largest investment bank in the United States, with 25,000 plus employees, over 150 years of history, and a reputation for aggressive growth. But behind the polished surface, Lehman had built its success on a dangerous foundation: massive bets on the housing market. At a time when home prices seemed unstoppable, Lehman doubled down, believing risk was small and profit was guaranteed. It wasn't. The dangerous game: subprime mortgages. In the early 2000s, banks began lending money to almost anyone, even borrowers with no income, no assets, and poor credit. These were called subprime mortgages. Lehman didn't just participate in this trend, it became one of the biggest players. Here's what made it so risky: subprime loans had high interest rates. Banks packaged them into complex financial products. Rating agencies incorrectly labeled many of them as safe. Investors believed the hype. Lehman bought billions of dollars worth of these mortgage-backed securities. They were making huge profits, until the housing market stopped rising. The bubble bursts. Around 2006 to 2007, home prices flattened, then began falling. Suddenly, homeowners couldn't pay their mortgages. Foreclosures skyrocketed. Mortgage-backed assets started losing value. Lehman, holding more toxic assets than almost anyone, began bleeding billions. But instead of slowing down, executives tried to hide the losses, hoping the market would recover. They were wrong. The death spiral. By 2008, Lehman Brothers was drowning. The bank, owed massive short-term debts, couldn't sell assets fast enough, and had lost investor confidence. Their stock price collapsed 90% in a matter of months. Lehman begged for a bailout. They sought a buyer. Barclays and Bank of America looked at the books and walked away. Why? Because the losses were simply too enormous. With no savior, Lehman Brothers faced the unimaginable: bankruptcy. September 15, 2008, collapse. At 1:45 a.m., Lehman Brothers filed for Chapter 11 bankruptcy, American history. The largest bankruptcy filing in. The fallout was immediate: global markets plunged. Credit markets froze. Banks stopped trusting each other. Businesses couldn't borrow. Panic spread across every major financial center. It was the moment the 2008 financial crisis went from severe to catastrophic. Why Lehman's collapse was the biggest mistake? Here's the shocking part: Lehman Brothers didn't have to fall. The US government had bailed out other institutions: Bear Stearns, AIG, Fannie Mae, Freddie Mac. But in Lehman's case, Treasury and the Federal Reserve refused to intervene. Some saw it as a moral stand, a message that reckless banks wouldn't always be rescued. Instead, the decision triggered a global recession, trillions in lost wealth, millions of jobs destroyed, and the worst economic crisis since the Great Depression. Many experts now agree, letting Lehman fail was not discipline, it was a disaster. Summary. To recap, Lehman Brothers bet heavily on risky mortgages. The housing crash exposed massive hidden losses. Investors panicked, and the bank collapsed. The government refused a bailout. That decision accelerated a global financial meltdown. The fall of Lehman wasn't just a bankruptcy, it was a turning point in modern economic history. If you found this breakdown helpful, hit like, subscribe, and turn on notifications. Comment below, do you think the government should have saved Lehman Brothers, or was the collapse necessary? Thanks for watching Make Money with Panda. See you in the next one.